Welcome back to The Sensible Investor, the podcast where we try to make sense of the sometimes senseless world of finance. I'm your host, Kate. We're joined again by our market analyst, Mark. It's great to have you.
It's always a pleasure, Kate.
Mark, a couple episodes ago, we discussed AMD and their ambitious push into artificial intelligence. It seems only fair that today we discuss the undisputed king of that world, a company that has transformed from a gamer's favorite into the engine powering the entire AI revolution, Nvidia.
King is the right word, Kate. It's almost impossible to overstate Nvidia's dominance. They've captured an estimated 80 to 95% of the market for AI accelerator chips. It's less of a market share and more of a market monopoly. They've executed one of the most brilliant strategic pivots in corporate history.
Mark, it's fascinating how Nvidia became so dominant in the AI space. It feels like it happened overnight, but the groundwork must have been laid years ago. Was it always obvious that GPUs were the future for something like artificial intelligence? My understanding is that for years, everyone in tech thought powerful CPUs were the only way forward.
That's exactly right, Kate, and you hit on the absolute core of their strategic genius. For a long time, the entire industry was focused on making CPUs faster and more powerful for complex, sequential tasks. The thinking was, if you want to solve a bigger problem, you just need a bigger brain.
So what did Nvidia see differently?
They realized that the math at the heart of modern AI, the training of neural networks, wasn't necessarily a job for a single brilliant brain. It was a job for a massive, coordinated workforce. I like to use an analogy. A CPU is like a single brilliant rocket scientist. It can solve incredibly complex problems that have to be done in a specific order, one step at a time. But if you give it 10,000 simple math problems, it has to solve them one by one very quickly. A GPU, on the other hand, is like an army of 10,000 soldiers. None of them is a rocket scientist, but you can give them all the same simple instruction, like add these two numbers together, and they can all do it at the exact same time. This is called parallel processing. Nvidia understood that training an AI model was less like solving a single hard problem and more like performing billions of simple calculations simultaneously. It was the perfect job for that army of soldiers.
That's a fantastic way to put it. So, if the GPU architecture was so perfectly suited for this, why did Nvidia get such a massive head start? It seems like a huge oversight by everyone else.
This is the second and arguably more important part of the genius. It wasn't just recognizing the hardware was a good fit, it was building the bridge to make it usable for everyone. For years, programming a GPU for a non-graphics task was an arcane, incredibly difficult process. It was a powerful tool locked in a box with no key.
So how did they unlock it?
They created the key. That key is their software platform, CUDA. CUDA is the Rosetta Stone that allows millions of scientists, researchers, and developers to use a relatively simple programming language to command that army of GPU soldiers. They didn't just build the army, they wrote the simple instruction manual that everyone can understand.
So it wasn't just about having the better tool, it was about being the only company that provided an easy way for people to use it.
Precisely. By the time the AI revolution truly ignited, Nvidia was the only company with a readily available battle-tested army and a library of instruction manuals that an entire generation of developers already knew how to read. That's the moat that competitors are finding so difficult to cross today.
It truly has been stunning to watch. I remember not long ago, Nvidia was known as this company that made sound cards and graphic cards for video games. I remember when opening up a video game, you'd get that Nvidia whisper at the load screen. No one expected them to blow up the way they did. So for an investor today, looking at a stock that has already had a run of historical proportions, what is the core bull case for buying Nvidia? How can this momentum possibly continue?
The bull case is that what we've seen so far is just the first inning of a very long game. Nvidia is basically selling the shovels, the pickaxes, and the entire railroad system for the AI gold rush. Their high-end GPUs, like the latest Blackwell architecture, are the undisputed best-in-class for training and running large language models. There is so much demand for their GPUs that now they have a multi-year backlog. But the real story, the reason their position is so incredibly durable, isn't just the hardware, it's the software moat.
You're talking about CUDA. We hear that term all the time. In fact, you mentioned it during your AMD episode briefly. Can you explain in simple terms what it is and why it's such a powerful advantage?
I'd be happy to. CUDA is NVIDIA's software platform that allows developers to unlock the massive parallel processing power of their GPUs for general-purpose computing. They started building it over 15 years ago, long before the AI boom. As a result, millions of AI researchers, data scientists, and university students have built their entire careers using CUDA. All the major AI frameworks, TensorFlow, PyTorch, are optimized for it. Asking a data science team to switch from CUDA to a competing platform like AMD's ROCm and asking an entire city of English speakers to start conducting business in Esperanto tomorrow. It might be technically possible, but the ecosystem, the libraries, the existing code, and the trained talent pool create an almost insurmountable barrier. It's an incredibly powerful and sticky mode.
So even if a competitor builds a slightly better chip, they still have to convince the world to learn a new language. Well, good luck with that. Is Nvidia just an AI company now, or do their other businesses still matter?
That's the other part of the bull case. While the data center segment is now a behemoth, their other businesses are still strong and provide future growth vectors. The gaming division, their original bread and butter, still produces the most powerful GeForce GPUs and has a lock on the high-end market with technologies like DLSS. Their professional visualization segment, powered by the Omniverse platform, is a bet on the industrial metaverse and creating digital twins for manufacturing and design. And their automotive division, with the NVIDIA Drive platform, is a major player in the race for autonomous driving. They have multiple shots on goal.
An incredibly powerful position. It sounds almost unassailable. So let's play devil's advocate. What is the detailed bear case? What could possibly go wrong for the king of AI?
The first and most obvious risk is valuation. The stock's price-to-earnings ratio is often in the stratosphere, sometimes trading at over 70 or 80 times earnings. To put that in perspective, a mature, profitable company might trade at 20 times earnings. The market is pricing NVIDIA not just for perfection, but for continued global domination for years to come. A price like that is like a tightrope walker working without a net. Any slight misstep, like a quarter with slowing growth or reduced guidance, could lead to a massive, painful correction in the stock price. You're paying today for growth you hope happens in 2030.
You know, that's another thing I noticed. In almost every episode, we talk about a company, whether it be AMD, Costco, Apple, or Microsoft. We always talk about how these are great companies, but they're always overvalued. It looks like the whole market is overvalued right now.
You could say that. This is especially true for technology stocks, but also investors are bidding up any company that seems to be doing well, including Costco, which we covered last episode. Currently, the entire NASDAQ index trades at a valuation that is the highest since 1999 in terms of PE ratio, price to cash flow, price to book value, or any other metric you can think of.
Sounds scary. So what could cause NVIDIA's growth story to stumble? The competition seems to be miles behind.
The competition is formidable, and it's coming from all sides. We talked about AMD and their MI300X chip, which is a very credible hardware alternative. But the even bigger long-term threat might come from NVIDIA's own biggest customers, the hyperscalers. Google, Amazon, Microsoft are spending tens of billions of dollars on NVIDIA's chips, and they hate being dependent on a single supplier. All of them are now deep into designing their own custom AI chips. Google has their TPUs, Amazon has Trainium, and Microsoft has Maya.
So they're trying to build their own shovels instead of buying them from NVIDIA?
Exactly. While these in-house chips may not beat NVIDIA on raw performance today, they are tailored specifically for their own data centers and can be much more cost-effective for certain tasks, especially inference, which is the running of an already trained AI model. As these homegrown solutions get better, it could chip away at NVIDIA's sales for those specific workloads.
And I assume the geopolitical risks we've discussed with other chip companies apply here as well?
They apply here more than anywhere. NVIDIA does not own its own factories. It's a fabless designer. It relies entirely on TSMC in Taiwan to manufacture its most advanced, cutting-edge chips. Any disruption to that single point of failure, whether from natural disasters or political conflict, would be catastrophic for their supply chain. Furthermore, the U.S. government has already placed significant restrictions on selling high-end AI chips to China. China was once a massive market for their data center GPUs that is now largely cut off, representing a permanent headwind to their potential revenue growth.
So putting it all together, we have a company with a near monopolistic grip on the most important technology of our time, but with a valuation that reflects that dominance and fierce competition from both traditional rivals and its own customers. Mark, what is the final sensible takeaway for an investor looking at Nvidia?
Investing in Nvidia today is a bet on a truly phenomenal generational company at a very, very demanding price. The bull case is that the AI revolution is still in its early innings, and as the primary enabler of that revolution, Nvidia's growth will be so immense and durable that even today's high valuation will look cheap in hindsight. The bear case is that you're paying a premium price at the peak of the hype cycle, just as serious, well-funded competition is beginning to emerge.
For a sensible investor, it's a question of your personal conviction in the longevity of their moat and your tolerance for extreme